Hey, what's up, guys? How are you guys doing today? Welcome back to another live stream from Charlotte in North Carolina. Hello. Welcome back, everybody. Genesis, Johnny. Hey, Mike. Hey, Mike. Laugh. Candace, Lucas. Gimoni. To you. There you go. So, how are you guys doing today? Good? Please drop a comment down below and let me know what stocks you want me to go over. And in the meantime, what's good, Alvaro? Appreciate all the good work and teaching you do for us on Discord. Thanks, man. Thank you. That's the main idea. You guys to be able to learn new stuff so you can make your own decisions trading wise. So that's the idea of the whole community for that matter, right? Correct. And that's what the pro investors are doing on Discord. Nvda, of course. Brandon, sure. Okay, it's been a long day for me, guys. I'm telling you. Per usual, I am going to have to run the extra mile for you guys today. And I still need to film a video. I still need to make a video once I'm done streaming for you. So, well, let's get into this right away. I still have a lot of work to do. Okay, so green day across the board today. Once again, what a comeback for the Bulls, guys. Impressive. The Russell 2000 went up today 2.45%. The Nasdaq went up 2.34%. Sorry, 2.34%. The Dow went up 1.39%, up 554 points today. Wow. And the S&P 500 went up today 1.61%. By the way, guys, keep in mind that tomorrow we have options expiration. That's a day that occurs once a month in which we can make a case that sometimes weird stuff happens. Is it going to be the case tomorrow? We don't know about that. But you have to keep in mind that maybe volatility could be higher than usual tomorrow and potentially more elevated relative to the most recent 3 trading sessions in which volatility has, decreased notably. Let's just put it that way. If we take a look at the sectors of the markets, guys, take a look at the rally that we saw today in consumer discretionary. Up 3% today. Do you guys happen to know what are the most important holdings or the heaviest stocks inside this sector, consumer discretionary? Do you guys know? Consumer discretionary, one of those stocks is... No, okay. Amazon and Tessie. Those are the most important stocks or the heaviest holdings inside consumer discretionary, and both stocks had a very solid day today. And take a look at the performance of technology, guys. Up 2.88% today. Unbelievable, guys. It was an amazing rally. We only had 2 sectors closing in negative territory. I am talking about utilities. Pretty much flat, down 0.01%. And real estate, down 0.33%. I think that the 10-year Treasury yield went up today, guys. And that's the reason why, the 10-year Treasury yield went up today 2.77%. So that's the reason why we saw real estate underperforming and actually being the worst performing sector today. But other than these 2 sectors, we had a very solid rally across the board. And take a look at a 4-hour chart of the SPY, guys. Take a look at this. So the SPY went up today 1.71% and it closed the trading session at $553. Brand new higher high above all the moving averages. And we can spot over here the 5-day moving average upward sloping. This is a technical chart that is under the total control of buyers. 100%. Can the SPY keep going higher? Yes, it can. We are approaching a potential area of interest from a resistance standpoint. I am talking about $555. This is a previous resistance back from August 1st. I think this was the day after the last Federal Open Market Committee. So once the bulls failed at bursting above $555, the SPY collapsed. It fell something like 8%. I can double check on that. It went down 8.50%. So tomorrow, guys, if we happen to see a test of $555, you can bet on the fact that we are going to have a lot of market participants saying double top, double top, double top. We don't know if this is going to be a double tap formation, obviously, right? But I guess that according to my experience, we're going to have a lot of people buying puts right at $555. The SPY could retrace from $555. I am not going to be guessing if the SPY is actually going to do pull back from $555. At this point, guys, the SPY has gone up pretty much 8% in a method of, I don't know, like 7 or 8 trading sessions. So we can make a case over here that this recent push to the upside is a bit extended. So the SPY could take some sort of rest. So the most important area that I am going to be keeping an eye on tomorrow in order to maybe short the tape, in order to get some puts of the SPY, would be $550. $550 is a previous support back from mid-July that, if happens to be broken to the downside, could be potentially opening the door for a test of the 50-day moving average at $544 approximately. So a pullback, taking into account the current technical condition of the SPY, is pretty much in the cards. It could happen, not necessarily, okay, mind you, but a pullback down to the 50-day moving average, guys, down to $544 would be normal market behavior. And the bulls could be potentially finding support at a very important moving average, such as the 50-day. And on top of that, if that were to happen, probably the 5-day moving average would still be upward sloping. That would increase the likelihood for the bulls to find support at around $544. Again, this would be normal market behavior. But can the bulls take out or burst above $555 and keep going? Yes, they can. Obviously, this technical chart as of now is under the total control of buyers. I am expecting a little pullback. That's what I'm expecting, but I cannot say for sure that is actually going to be happening, right? So the bulls consolidate above $555. If that were the case, they can keep melting up. But I would be a buyer of puts if $550 happens to be broken to the downside, and I might be buying the dip near the 50-day moving average at around $544 approximately. So there you guys have your SPY analysis. But and remember, guys, you don't need to worry about the SPY. You know that I am calling out areas of interest on Discord pretty much on an hourly basis, I would say. I am super active on Discord. For the most part, when we see volatility, okay? So you don't need to worry about the SPY, because I am going to be, if we happen to see volatility, maybe going higher tomorrow because of the options expiration, the monthly options expiration. If that were the case, I am going to be very active on Discord. Okay, so what stocks you guys want me to go over? Nvda, of course, Nvda. I closed a trade today on Nvda, making $200. Yesterday I got 100 shares when I saw Nvda bursting above $117, and I closed a trade today in a successful way. Let me take a sip of coffee here, guys. So it looks like we are having a front running of the upcoming earnings report of Nvda. So as of now, guys, this stock is innocent until proven guilty. Above all the moving averages, above the 50-day moving average, and over here we can see the 5-day moving average upward sloping. So it looks like the bulls are gathering momentum in order to make a test of the next potential gap to the upside up to $125. $125 is a previous level of resistance at which the bulls failed back in, this was back on July 23rd. So this would be the next gap to the upside. Let me pull up here an anchor VWAP from, or let me take a look at an anchor VWAP of Nvda from all-time highs. So let's see Nvda Corporation. I'll take a look, guys. So if we anchor a volume weighted average price line from the all-time highs of Nvda, we had, or we get an average cost of $119. Nvda is as of now under the total control of buyers, guys, 100%. So as long as the bulls remain trading above the 50-day moving average, $120, I think that we have $125 coming up. More likely than not, I would say. In case of a retracement of Nvda, I would be thinking about buying the dip near the 50-day moving average, as I just told you guys, at around $120. By the way, $120 happens to be a previous support of Nvda back from early July. And if this 50-day moving average is broken to the downside, I could be interested in buying a dip in Nvda near $117. This is a previous support for Nvda back from mid-July. But I think that this 50-day moving average at $120, given the fact that, or taking into account that this 50-day moving average is slightly above the anchor VWAP that comes from the all-time highs of Nvda, I think that this area between 119 and 120 could be a potential area to buy the dip. And you guys know Nvda, when this stock starts to run, it runs. So above $125, guys, you guys know the way Nvda runs. So we have, I don't know, 130. I don't know, maybe $133. Very good looking chart for Nvda. Let me take a look at the market structure of Nvda. What do we see over here? Let me take a look at the supply and the demand of Nvda. And take a look, guys. This is a good looking market structure. No, this is AMAT. Sorry, guys. This is not. This is the wrong stock. Let me take a look at Nvda. Okay, demand and supply. Take a look, guys. The demand is finally starting to rise. This is a market structure chart. So what you guys are seeing over here is on top of this chart, the demand are buyers, and at the bottom, the supply are sellers. So we can make a case that the supply is rising, but at the same time, the demand of Nvda is starting to rise since late July, guys. This is very positive. So above $125, Nvda can keep going, and I would be a buyer of the dip near 119, $120 approximately. Okay, let me take a look at, you guys are asking about Tesi. Let's go ahead and take a look at Tesi. It went on a tear today, guys, helping out the consumer discretionary sector. So Tesla went up today 6.34%, and it closed the trading session at $214.14. Take a look at the spot, guys, that acted as resistance today for Tesi. Look, this pink line, this is none other than the 20-day moving average. And take a look at the slope, guys, of this moving average. It is downward sloping. That implies that if tested as resistance, it is very likely to act as such. And that's exactly what happened today in the case of Tesla. So, if Tesi can burst above $120, it would be bursting above all of the moving averages, or at least most of the important moving averages out there. So this would be very bullish, guys. And take a look at how this 20-day moving average happens to coincide with a previous support for Tesla back from late July. So above $216, I think we have higher prices coming up for Tesla. The next potential gap to the upside would be $226. This is a previous resistance back from late July. If we were able to take this trade the way that I am describing it over here, guys, say that we start a trade on Tesi slightly above $216, from $216 up to $226, this could represent a 4% profit trade. So very bullish behavior for Tesla if this stock is able to consolidate above 216 bucks. Let me take a look at some anchor VWAPs of Tesla. What do we see over here? Let's go ahead and take a look. Tesla. There you go, Tesla. And wow, I have a lot of anchor VWAPs here, guys. But let's see. Okay, so take a look at this anchor VWAP that I am pointing out with my mouse. This is an anchor VWAP that comes from the 2023 low of Tesla. Way back then, in early 2023, Tesla hit 100 bucks per share. So these market participants have an average cost of $209. And Tesla closed today at 214 bucks. So Tesla already got rid of an important level of overhead supply. So the next important level, guys, let me see. Yeah, so if we take a look at anchor VWAP that comes from the, this is the 2023. Okay, yeah, if we take a look at an anchor VWAP that comes from the high of Tesla of 2023, we get an average price of 217 bucks. So guess what, guys? If the bulls of Tesla can consolidate above the 20-day moving average at the same time, if we are talking about a consolidation above 217, 216 bucks, that would imply that the bulls would be recapturing not only the 20-day moving average, but also the anchor VWAP that comes from the 2024 high of Tesla. This is very bullish behavior. So above 217, 216 bucks, I think that we have higher prices coming up for Tesla, in my humble opinion. And let me see, this other anchor VWAP is coming from, let me see, okay, this one comes from all-time highs. Well, take a look, guys. So if we take a look at an anchor VWAP of Tesla that comes from all-time highs, keep in mind that Tesla hit $409, guys, back in November of 2021. Well, those market participants, as of now, have an average price of $225. This is a major level of potential overhead supply for Tesla. So a process of consolidation above 217, 216 could take Tesla up to 225 bucks. That would be the spot at which I would be thinking about taking profits. And take a look at how $225 happens to coincide with a previous resistance for Tesla back from late July. So that previous level of resistance back from late July happens to coincide with an anchor VWAP that comes from all-time highs. So my bullish trade on Tesla would be from 216 up to 225, say, more or less. Let me take a look at the market structure of Tesla. So what is the demand and the supply of Tesla looking like as of now? Let's check that out. Let me see. Look, guys, the supply. Remember, demand buyers, supply sellers. By the way, when I talk about demand, I am talking about this blue shaded region that I am pointing out with my mouse. Take a look at how the demand collapsed until early August. But now, after, 15 days, the demand is finally starting to rise, little by little. Okay? And the supply is going down. So in minor time frames, we have more buyers than sellers. Above 216, I am probably going long Tesla. Alrighty, what else? Wow, I have a lot of requests over here, guys. Let me see. So, you guys are asking about Walmart. This was my best trade today, guys. I got calls on Monday. I wasn't thinking about holding those calls into earnings, but I had to, and I got late October calls. And guys, as soon as the session opened today, I made 1,300 bucks. I was, by the way, following an unusual call options alert, and it did work out. So I took a look at the report. It was a very decent report. Walmart went up today 6.58% and it closed the trading session at $73. Would I chase Walmart at all-time highs? No. I have a rule, guys, that I would like to share with you. I don't short stocks that are trading at all-time highs, and I don't chase either stocks that are trading at all-time highs. I just don't do it. So would I be a buyer of a dip on Walmart? Yes, I would. It was a very good report. And you guys know that the markets are kind of still not as much as they did a week ago, but the markets are still a bit concerned about a potential recession and stuff like that. So say that Walmart is some way somehow a defensive stock. Say that we see profit taking over here and Walmart happens to pay a visit down to the previous all-time highs of this stock at $71. I would be a buyer of the dip here, guys. Yeah, I would be buying the dip here. I wouldn't chase it here. So this would be my trade on Walmart, holding a previous level of resistance at around $71. And while I am streaming for you guys, I am seeing over here Bitcoin. It's getting killed after hours. Ugly, huh? We are seeing a lot of downwards pressure on the crypto space in general terms. So in the case of Walmart, guys, this is an easy one. A test or a successful test of $71, I think, in my opinion, would be opening the door in order to start a position on Walmart. I'm not going to show you guys any anchor VWAPs. We don't have any buyers trapped over here because this stock is trading at all-time highs. So can we take a look at the market structure? Let me take a look at the market structure of Walmart. Let's see, what do we see over here? Let me take a sip of, what is it? Sprite. Okay. So, take a look, guys. So the demand is flattish. Look. Okay, remember on top of this chart, you guys can see the demand or buyers, and at the bottom, you guys can see the supply. So the demand is kind of flat, and the supply is kind of rising here. And we can also make the case that the level of the supply matches the level of the demand. So over here we have, for the most part, a tie between buyers and sellers. So I wouldn't rule out, guys, a test of $71. And if that were the case, I would be a happy buyer of the dip on Walmart, more likely than not. Hello, Alvaro. Hello from Naples, Florida. Beautiful place, huh? I haven't been to Naples. I have to go. I still have to go to Naples. But I have seen a lot of pictures and videos and stuff like that. Very beautiful place. Yeah, I'm jealous. I am jealous at Kiko's stocks. Okay, what else? Hey, Mike is asking about the essential indicators and how they are useful in confirming bull or bear movement. Bro, if you take a look at my stream with you guys from last Thursday, you're going to see a very deep, I would say, explanation about the moving averages. I was explaining to you guys what a daily moving average is, and also a simple moving average, and also an exponential moving average. So send me a DM, bro, so I can share the link of last Thursday stream with you, and you can take a look at the at that video. Okay, so I don't have to circle back on that. Okay, not a problem. Yeah. So Coinbase, and as I am streaming for you guys, the crypto space is getting killed. So Coin went up today 0.59% and it closed the trading session at $197.12. This is not a good looking chart, guys. So Coinbase is trading as of now below the 100, the 50, and the 20-day moving average. And as of now, we can say that the last line of defense for the bulls of Coinbase over here is none other than the 200-day moving average, near $191. I am telling you guys right now, if Bitcoin keeps dropping the way that it is doing it as of now, as I am streaming for you, and Coinbase breaks this 200-day moving average to the downside, as I just said, guys, at around 191 bucks, I am going to be getting Coinbase puts with both hands. This would be a short, a textbook short, because you guys know that Coinbase pretty much tracks Bitcoin. So Bitcoin falling off a cliff plus Coinbase breaking the 200-day moving average to the downside equals put options. In my opinion, the next gap to the downside would be 160 bucks. Previous level of support back from August 5th. Not a good looking short. In the case of Coinbase, we can make a case here, guys, that Coinbase went up today. Not much, but at least it was able, the bulls were able to pull off a green day today here. And we can also make a case that the bulls were able to close today's trading session above the 5-day moving average. This white line that you guys are seeing over here and that I am pointing out with my mouse. So is there some sort of bullish case here in the case of Coinbase? Yeah, maybe holding the 5-day moving average as support. Say a process of consolidation above 195 bucks, which happens to be a previous level of resistance back from August 12th. Well, this could open the door for a test of 205 bucks, which is a level of resistance at which Coinbase fell today. And why not the 20-day moving average near 215 bucks? So above 195, I maybe could give Coinbase a shot if I happen to see Bitcoin rising. And if Bitcoin keeps dropping like a rock and you guys see Coinbase breaking 190 to the downside, I think that this could be a short opportunity. Let me take a look at the market structure of good old Coinbase. What do we see over here? Let's see. Coinbase. Oh, take a look, guys. So the demand is starting to rise after, 15 days of non-existent demand. This is kind of positive, but at the same time, the supply is also rising. And we can make a case here that the level of the supply is a bit higher relative to the level of the demand. That implies that we have more sellers than buyers in minor time frames. So, yeah, a short breaking 190 to the downside and maybe a long with Bitcoin rising and Coinbase consolidating above 195 bucks. And if we take a look at some anchor VWAPs of Coinbase, and you guys know that this is my favorite indicator, guys. An anchor VWAP is used, guys, in order to visualize potential areas of supply and demand. Because an anchor VWAP, guys, shows us levels at which we have market participants located at, with unrealized losses if we have an anchor VWAP above the current price of any given stock, or with gains, so that would be a potential area of demand, if an anchor VWAP is located below the current price of any stock. Do you guys understand that concept? I guess. Okay, and this is a very useful tool that I use always, guys. When it comes to potential prices or entry points for my trades, I would say, guys, that maybe, by the way, Palantir is falling off a cliff, guys, after hours here. Yeah, something happened with Palantir, I think. So I would say, guys, that 80% of my trades are based on levels that I get from anchor VWAPs. This is a very useful tool that, in my opinion, everyone should be using. So in the case of Coinbase, guys, if we anchor a volume weighted average price line from the most recent 52-week high of Coinbase hit 282 bucks back on March 25th, we get an average price for the market participants that started positions on Coinbase way back then, when Coinbase hit its latest 52-week high. Over here, we get a price of $229. What do you guys think? And this is something that I usually ask you guys when I am streaming for you. So say that you have a losing position on Coinbase at $229. And Coinbase is trading as of now at $197. So you have an unrealized loss, right? Okay. What would you guys do whenever Coinbase goes back up and hits your average cost of $226, say $227? What would you guys be doing? Would you wait to see if Coinbase keeps going higher so you can close that position with a gain, with a profit? Or would you close your position breaking even? Who has an answer? Let's see. Well, fear is a powerful motivation. Likely close and go somewhere else. Correct. Correct. So, say that Coinbase starts to go back up. This is a potential area of resistance. Put this down on a sticky note. Coinbase could be a short at $229. Potential. Okay? I never speak in absolute terms. And none of you should speak in absolute terms either. Never. Okay? This is a probability game, guys. So we should always, or we have to always talk about potential outcomes and not 100% certain outcomes. Okay? So, yeah, that's my take on Coinbase, guys. Let's see what happens here. And the supply, I already went over the supply, so that's good. Okay, good. Okay, Apple. Let's take a look at Apple. Let me see. IAPL. Oh, that was a stock that I traded, day traded today. MJJ, Ulta. I got calls at $362. I am not a trader of downtrends, which is the case of Ulta. But, you know, we got the news of Warren Buffett and stuff like that. And I got an unusual call options alert. And it was like, okay, I am going to give Ulta a shot here. And it ended up working out. Lucky enough. Apple. Take a look, guys. It went up today 1.35%. And it closed the trading session at $225.72. So take a look, guys. Apple is getting closer to a potential level of resistance at $225. It actually fell today at that level. Almost. Well, it almost hit $225. It didn't do it. It was very close of hitting $225. What do you guys think is going to be happening tomorrow at $225? We are going to have a lot of people calling out a triple top. Guys, I have tried a lot of I have tried in my entire career. I have tried like different trading styles. And do you know what trading style made me lose the greatest amount of money? Technical patterns. Like, okay, this is going to be a triple top. I want to grab some puts here. Oh, this is a double top. Let me get some puts here. Oh, this is a double bottom. Call options it is. Oh, this is a head and shoulders. Put options. Oh, this is an inverse head and shoulders. Call options. Bullshit, guys. Most of the technical patterns and the falling wedges and the rising wedges and stuff like that, and I am talking out of my experience. Most of those technical patterns do not work out. Some of them do. But if you trade most of your trading decisions based on technical patterns, you are going to be losing way more money relative to the money that you're going to be making. I guarantee you that. And I never speak in absolute terms. But when it comes to technical patterns, you have to be very careful and you need to wait for confirmation. So if I have, say that this could be a triple top. because, you know, Apple failed at $225 back on August 2nd and also back on August 1st. Would I be buying puts here? No, of course not. I would wait for confirmation. What could be a confirmation? Okay, Apple is rejected up there. It retraces and it breaks to the downside, an upward sloping 5-day moving average. You need confirmation. I have 7 years, Aiken. You need to wait for confirmation and never, ever start the trade based on a technical pattern. Please don't do it. Please do not make the mistake that I made on so many occasions. And the golden cross. And what is the other pattern, guys? With the moving averages, the golden cross. And the death cross. Oh, this is a death cross. This stock is going down. Okay, circling back to Apple, guys. This could be a triple top. Say that Apple is rejected up there. The first level that I think that the buyers would be defending would be the upward sloping 5-day moving average, $220. So this could be either, this would be a very important spot, guys. This could be a level at which we could be playing a bounce in the case of Apple, or if $220 is broken to the downside with, I would add higher volume than usual, we could be getting puts over there. But take a look at how this upward sloping 5-day moving average happens to coincide with a previous level of resistance back from early June. We can say mid-June. So this is an important level, guys. And mind you, say that Apple consolidates above $225, so this quote-unquote triple top would be invalidated. And if that is the case, guys, Apple consolidates above $225, we have higher prices coming up for Apple. And the next important gap would be, we have a first gap up to 227 and a second gap up to 231. So above 225, I would be going low on Apple. And I would be interested in seeing some sort of pullback down to the upward sloping 5-day moving average. And if that level acts as support, and taking into account that we are talking about a previous level of resistance, I would be also going low on Apple here. Or if, I don't know, guys, maybe tomorrow we see a red day, we have options expiration, and I don't know, the tech sector is getting killed and stuff like that. If that is the case, Apple breaks 220 to the downside, I would be interested in grabbing some puts over here. Okay? Can hit 230 soon? Yes, it can. Oh, yes, it can. Above 225? Yes, it can. 100%. Sure. This is a very good looking chart, guys. A brand new higher high, above all the moving averages, upward sloping 100, 50, and 5-day moving average. This is a technical chart that is under the control of buyers. And by the way, and speaking of anchor VWAPs, I think that Apple is already above the anchor VWAP that comes from all-time highs. Oh, yes, it is. Take a look. If we anchor a VWAP, or if we anchor a volume-weighted average price line from the all-time highs of Apple, we get an average price of $219. This chart is under the total control of buyers. By the way, take a look. So over here, we have the convergence of the 5-day moving average with a previous level of resistance, and also with the anchor VWAP that comes from all-time highs. Apple breaks 219 to the downside. This could be a short, okay? But we need, or you guys need to wait for confirmation. This is important, okay? And if we take a look at the market structure of Apple, demand and supply, what do we see over here? Let's see. AAPL, sorry guys. Okay. Apple. And here we go. Take a look. The demand is rising. Remember, on top of this chart, you guys can see the demand, and at the bottom, the supply. Demand buyers, supply sellers. The demand is rising, and the level of the supply is certainly above the level of the demand, but the supply is going down. This is a bullish market structure chart for Apple. So above 225, I think that Apple has an appointment with higher prices. And this market structure, in my opinion, would also increase the likelihood for the bulls of Apple to find support at the 5-day moving average near 220, 219 bucks approximately. Ulta. Boss, are you saying Buffett bought Ulta? Oh, yes, he did. Yeah. We found out yesterday. So this was my plan with Ulta, guys. And again, this trade, guys, went against all of my, how would I say that? It went against all of my technical convictions. How about that, guys? That sounded smart, right? I am not that smart, believe me. But that did sound smart. Okay, why? Because this is a major downtrend, guys. I am not a trader of downtrends. Take a look. Ulta is trading as of now below the 200 and the 100-day moving average. Take a look at the slope of the 100-day moving average. It is downward sloping. That is putting downwards pressure, or it is putting downwards pressure on Ulta. And the 50-day moving average is also downward sloping. And take a look, guys, at how the bulls were enabled to consolidate above the 50-day moving average. Take a look. So yesterday we saw this massive pop, on the news that Buffett ended up buying Ulta and stuff like that. So the bulls were able to burst above the 50-day moving average yesterday after hours, and they failed miserably on holding the 50-day moving average as support today. Why is it? Because that 50-day moving average is downward sloping. It is putting a lot of downwards pressure on Ulta. So let me zoom out here. Okay, let me zoom out. So ideally, guys, in order to go long Ulta, we would like to see a process of consolidation precisely above that 50-day moving average. So some sort of process of consolidation above 375 bucks. So the trade that I started today against my technical convictions was with Ulta holding 362 bucks. And why did I take this trade, guys? Because I spotted that 362 bucks was a previous level of support for Ulta back from late July. So 362 bucks acted as support back in late July, and it did again today. So I don't know, maybe I would start another trade on Ulta holding 362. The next gap to the upside would be this 50-day moving average. And mind you, guys, I took this trade because first, Buffett bought the stock. So that, gives it some sort of positive momentum, right? Despite the fact that we are dealing with a major downtrend. And also because I got an unusual call options alert. By the way, let me tell you about that alert. I don't know if you guys want to put this alert down on a sticky note. So someone invested, what a coincidence, right? Yesterday, $700,000 on call options of Ulta that expire on September 20th with a strike price of 380 bucks. I was like, okay, someone knew ahead of time, obviously, that Buffett started a position on Ulta and took advantage of that. This was a very obvious insider trading, right? So I would feel more confident with Ulta above 375, but maybe, guys, I don't know. Maybe tomorrow I could give Ulta a shot again, holding 362 as support. That could be the case. Why not? Take a look at some anchor VWAPs. Let me pull up here some anchor VWAPs of Ulta and take a look at this disaster, guys. This is back holder central. So if we anchor a volume weighted average price line from the all-time highs of Ulta, guys, at $565, Jesus Christ, we get an average cost of $409. Can you figure, guys, the pain that these people are feeling as of now, holding shares of Ulta at $409? Terrible. It is terrible. What do you guys think these market participants that are trapped on Ulta are going to do whenever this stock hits $409? They are going to sell the hell out of it right away. So despite the fact that Buffett actually, started a position on Ulta, any consistent, and I am quoting consistent, process of or potential process of recovery of Ulta is going to be a tough one, guys, a choppy one. We're going to see Ulta pulling back from different levels of overhead supply because we have a lot of buyers trapped over here, guys. A lot, but a lot. Let me by the way, guys, anchor a volume weighted average price line from the last earnings report of Ulta. Take a look, guys. Check this out. If we anchor a volume weighted average price line from the last earnings report of Ulta, take a look at the price that we get. $375. Do you guys think this is a coincidence? This is the best technical indicator ever, guys. Let me pull up here a 4-hour chart. Take a look at the spot that the bulls couldn't hold as support yesterday, and today as well for that matter. $375. Why did this happen? Mainly for two reasons. First, we have a downward sloping 50-day moving average that is putting downwards pressure on Ulta, but additionally, these people that were trapped at $375 closed their positions right away. Of course, they were losing money. Ulta hit $375. I am out of this thing. Oh, but Buffett bought the stock. I don't care. I am out. But Buffett bought the stock. That's bullish. I don't care. I'm out. I am out. So the fact that actually Ulta failed right at 375, that implies that we already had a lot of people that were trapped at $375 already, getting rid of their shares. So maybe, the next time that Ulta hits 375, that level might not be such a tough spot as it was today and yesterday as well, okay? So ideally, guys, we would like to go long on Ulta above 375. Oh, that was a very long analysis. Sorry about that, guys. My analyses are usually a bit long, right? Can you look at the triple Q? Sure I can. Let me see. Triple Q. And take a look, guys. This is a very good looking chart. And why? Well, because the bulls recaptured today. And take a look. The bulls are actually holding after hours. Despite the fact that the Qs went up today 2.50%. It was a massive day to the upside. But after hours, regardless of that, the bulls are holding as support the 50-day moving average. $472. This is bullish. Period. Full stop. The trend is your friend until the very end. And obviously, guys, tomorrow, make no mistakes, we are going to have a lot of geniuses out there calling out a double bottom. Mark my words. Let me remove the drawing. Let me see. Oh, yeah. This is a textbook double bottom. Double bottom on the Qs. It's going down. It could go down from there. It could be going down from there. It's possible, but you need to wait for confirmation. So say that the Qs fail tomorrow, guys, at $475. It's possible. It is a previous level of resistance. It could act as such once again. Why not? It could happen. But would I be buying puts there? Hell no. I would wait for a rejection from a previous level of resistance at $475, but I would wait for what? For confirmation. Confirmation, guys. So the Qs break the 50-day moving average to the downside, $472. After having been rejected at $475, I would be grabbing some puts here. But do not trust in technical patterns. Please wait for confirmation, guys. Always. Always. Okay, so we are, let me see, guys, because today I am not in a rush, but I still need to make a video, to film a video. So it's been a very long day for me, guys. Yeah. What is the name of the indicator? The anchor VWAP, a VWAP, Nikos, Pizza, and Deli. Let me drop a comment there on the live chat. In the live chat, let me see. Oh, my bad. Oh, I can do it here. Hold, guys. A VWAP. Sure. A VWAP. Anchor VWAP. There you go. Now that's a wrap. That's not the indicator, guys. God damn it. Hold in there. Hold in there. I don't know what happened with the dictionary of my tablet. AVWAP. There you go. An incurred volume weighted average price line. Okay. Okay. Super microcomputer. Before I wrap it up, and the IWM. Okay. SMCI went up today 8.59%, and it closed the trading session at $626.69. What a comeback, guys. In the case of super microcomputer, but mind you, we have a lot of buyers trapped all over the place. A lot. So, super micro is still guilty until proven innocent. So the next important spot for Supermicro is going to be none other than this downward sloping 20-day moving average at 640 bucks. Take a look at the slope of that moving average, guys. It is downward sloping. That implies that if tested on the way up, it is very likely to act as a tough level of resistance for the bulls of Supermicro. The 5-day moving average is starting to rise little by little, which happens to be positive in minor time frames. So I don't know, guys. This is a tricky one. I think that since the 5-day moving average is starting to rise, in case of a pullback, Supermicro could be fine some buyers near $566 approximately. Yeah, this could be a potential spot for a bounce and for Supermicro. And if we take a look at some anchor VWAPs, let me see if we can spot some important levels of SMCI here. Let's see, Supermicro computer, and wow, a lot of buyers trapped all over the place, guys. So an anchor VWAP that comes from all-time highs is signaling as of now 828 bucks. An anchor VWAP that comes from the first trading session of the year is signaling as of now 777 bucks. Go figure, guys. So yeah, this is backholder central. We have buyers trapped all over the place. So again, any potential process of recovery of Supermicro is going to be a choppy one, guys, with pullbacks here and there. So I think that this chart would start to look somehow constructive above the 200-day moving average, so above 673 bucks. That would be positive, and that I think that it would be potentially attracting buyers into SMCI. And in case of a pullback, guys, maybe this in minor time frames, the fact that the 5-day moving average is starting to rise is somehow positive. So maybe SMCI can, come across with buyers near 562 bucks. Let me take a look at the market structure. I took a look at the market structure of SMCI, or last time I checked the market structure of SMCI, it was looking super poor. Let's take a look at it now. Maybe we have a meaningful change that signals a light at the end of the tunnel. Let's see. No, guys. No demand at all. Take a look. Nothing. Buyers are nowhere to be found here. Not a good looking market structure, guys. For SMCI, we have a lot of buyers trapped all over the place. Maybe a pullback down to 566 could be a viable pullback. But ideally, if you guys want to go long SMCI, you need to wait for buyers to show more strength by, for example, recapturing the 200 DMA, 673 bucks approximately. IWM, small caps. Let's see what is going on over here. Take a look, guys. I'm talking about moving averages. So the IWM went up today 2.59%, and it closed the trading session at $212.04. Take a look at the spot at which the bulls pretty much fell today, guys. Take a look at this pink line. This is the 20-day moving average. So this is an easy one, guys. above the 20-day moving average, so above 214 bucks, this chart starts to look very bullish. It is looking bullish as of now, guys. So I mean, the IWM just made a brand new higher high, but the fact that the bulls are trading exactly below or slightly below, we can say, the semi downward sloping 20-day moving average is not a, I mean, it is somehow a tiny factor of concern. So I would be interested in going along the IWM above all the moving averages. So finally being able to consolidate above the 20-day moving average. So we're talking about a process of consolidation above 214. If that were the case, the IWM consolidates above 214 and we have maybe higher prices on deck. Maybe up to a previous level of support up to 219 bucks approximately. And why not a pullback here down to the convergence of the 20 and the 5-day moving average? This could be a viable pullback, guys, down to 208 bucks approximately. And finally, Lilly. You guys keep asking about Lilly before I wrap it up. Okay, Eli Lilly went up today 0.13% and it closed the trading session at $931.58. This is a very, very good looking chart above all the moving averages, upward sloping 5-day moving average. This chart is signaling that we have all-time highs coming up for Lilly, guys. 968 bucks, in my opinion. Would I be chasing Lilly here, guys? I would not, I guess. But what about a pullback down to a previous level of resistance, guys? What about a pullback of Lilly down to, say, 970 bucks? This is a previous all-time highs and also a previous level of resistance for Lilly back from early July. So this would be a spot at which Lilly could be potentially coming across with buyers. 970 bucks. But this is a chart that is suggesting that we have a potential test of all-time highs coming up for Lilly, guys. Yeah, this is a very good looking chart. No doubt about it, guys. And if we take a look at the market structure of Lilly, I'm not going to pull up any, anchor VWAPs, guys, because we don't have any. Lilly is pretty much trading at all-time highs, so we don't have any buyers trapped over here. And take a look at this market structure, guys. The demand is through the roof. The demand is through the roof. Period, full stop. And the supply is starting to rise, but it is below the level of the demand. This is a very good looking chart, guys. I would be surprised, and I never speak in absolute terms. I already told you guys that. I would be surprised if Lilly doesn't hit all-time highs sooner rather than later. Yeah, very good looking chart, guys. Ideally, every single chart that we trade should be looking like Lilly's. Okay? Uptrends. Or if you see an uptrend, guys, that implies that buyers are in control. And if you see a downtrend, that implies that sellers are in control of the tape. So why would you contradict the ones that are in control of a tape? Don't do it. Okay? You need to respect the net aggregate opinion of the markets. Uptrends, we go long. Downtrends, we short. And that's it. And with that last reflection, I am going to wrap it up. I still have a long day ahead of myself, guys. So we are 58 minutes in. How about that? Did you guys like the stream? Awesome. If you did, please do me a favor. Go to my YouTube channel and drop a comment and hit the like button because I am streaming for you guys. So the comments that you guys drop in the live chat do not make it to the video that I am going to be releasing on my YouTube channel. Okay? Thank you, guys. And let's hope for some sort of volatility tomorrow, okay? Thank you. You guys enjoy the rest of your day. Thank you for watching. Thank you for listening. And I will see you guys on Discord. Take care. Bye, guys. Take care. Thanks. Bye.